Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Lemonade, Daniel Schreiber. Welcome.
Good to be with you.
Great to see you again. Before we get cracking, let's learn a little bit more about Lemonade. So, Daniel, you're an insurance company. I think you proudly proclaim on your website, you tell customers to forget everything they know about insurance. So, if they've forgotten everything, what should they know about Lemonade?
Well, Lemonade tries to make insurance as accessible, immediate, affordable, and yes, even fun for consumers. And we really do that by leveraging all the amazing capabilities that insurance introduced into this space. So you can buy a policy in as little as 90 seconds, and we sell homeowners and renters and pet and car insurance. And perhaps more remarkably, you can get paid in as little as 3 seconds, all from the comfort of an app. And we do that all day long, approaching or almost 50% of our claims are now handled in that fashion. So really a very different experience from what you're used to from the traditional insurance industry.
Did I see or read that you kind of got a world record in the amount of time the speed with which you paid a claim? Did I make that up, or did I see that somewhere?
No, you didn't make it up. It's true. We claimed the world record already 7 years ago, shortly after we launched, when we paid a first claim within that 3-second window. In the UK, where we launched just a few months ago, we paid a claim in 2 seconds, so we shaved a second off that, and that garnered some interest. But yeah, it's as close to instantaneous as matters.
Okay, and you took Lemonade public kind of at the peak of the IPO and fintech boom. Things have clearly fallen back to earth since then, with investors much more focused on sustainable profits, or at least the prospect of them. Lemonade is still, certainly at the net profit level, loss-making. When is Lemonade going to be profitable? What are you targeting, if you can share that?
Yeah, so we gave a fair amount of information to our investors on an investor day that we held in November in New York. And there we showed kind of a 5-year horizon and how peak losses are already behind us. We had projected that Q3 of last year would be peak losses, and that's holding true. So we are seeing declining losses, even as we're seeing significant growth on the top line. So in Q1, we reported a shrinking loss line, but 56% growth on the top line. And if you just play that forward of continued growth on the top line and continued shrinking losses, you can see how those combine or come together towards profitability in the coming years.
Years, okay. And you mentioned you've launched in the UK and you are kind of expanding across Europe. Tell us more about how those expansion plans are going, and if Lemonade has been welcomed as much in Europe as it was in the US when it launched there.
So we launched first in Germany, although we're headquartered in Amsterdam, we're regulated by the Dutch authorities. We launched first in Germany, then in Holland, then in France, and most recently in the UK. And I think the reception has been improving with every launch, so to speak. Our German market has been our least successful launch, and I think we've learned from our mistakes and we've progressed, and our European business as a whole is doing increasingly well, and by some metrics better than our US business.
And as listeners, viewers will note, your accent, do you feel particularly happy that you're now in the UK? Kind of a homecoming?
Yes. I've got a grandmother in Hampstead, and I've got a brother and parents-in-law and all different other people scattered throughout London. So the opportunity for them to become customers is a source of joy.
Excellent. All right, so look, we've learned about Lemonade. Let's now get to know Daniel a little bit better. So, Daniel, your family, I know we've discussed this in the past, they had a kitchen business when you were growing up. I even remember seeing the ads for Schreiber kitchens on TV. Are you good in the kitchen? Is there a kind of Daniel Schreiber signature dish?
Oh, wow. I do cook. It's something of a paradox because I'm vegetarian, have been for some time, but I'm the meat cooker at home. So I make what I'm told is a pretty good brisket and mean London broil. I also make quiches and flans and some other things. A shakshuka is my wife's favorite dish that I make. So yeah, I'm reasonably active in the kitchen.
And we've chatted in the past as well about how you switched from being a lawyer, I think because you wanted to be more where the action was happening. It's obviously not all sunlit uplands as an entrepreneur. Have you ever regretted the switch? And what's been the worst day for you as a founder, CEO? Of course, Lemonade, not your first rodeo.
Gosh, no, I've never looked back. I've never missed or regretted the law, moving from the law. That being said, I do use the training, and it I think has set me up well for the decisions I make and the interactions I have with other companies, etc. So certainly no regrets. And of course, insurance is a highly regulated industry, and a legal prism is a valuable one. The toughest day, that's a tricky question. I certainly can tell you about one of the toughest periods. I don't know if I can concretize it down to a single day, but in the early days of Lemonade, we were very excited about what we're doing. We'd built this cool technology. We had a proto version of the app, but no license from the great state of New York, which is where we'd been waiting for a license. And we had a long period, what seemed like ages then, it was actually just months, but during which time there was no certainty whatsoever that we would ever get licensed in the US. And really everything that we had built and worked towards and the funds that we had raised were predicated on the notion that at some point we would get regulated as an insurance carrier in New York. So that was a very stressful period for a couple of months at least.
And at Lemonade, I think you were kind of pushing the ethical line or the ethical nature of Lemonade's business long before, or not long before, but before certainly ESG kind of became de rigueur or fashionable, and then of course now in some quarters it's become a bit toxic. Why does it matter to you so much, and do you get any blowback in the United States for kind of having this ethical stance when kind of being ethical is in some quarters seen as almost a bad thing?
It's important for us on multiple levels. For Shai and I as founders who had been around the park a couple of times, it was important for us to ensure that our next endeavor was not merely money making, but also paid dividends in other currencies, and we wanted to do something impactful. So at a personal level, in terms of our aspirations and the psychic gratification that we were seeking, it was important. But we've never apologized to our shareholders for the fact that we have a give back model. We gave back this year over $2 million to over 50 different charities of our customers' designation. And I think it's incredibly accretive to shareholder value. In our case, it is born of game theory and behavioral economics and a fairly robust understanding of what it is that brings out the devil in people when it comes to insurance, and encourages people, or certainly gives them license to embellish their claims, and then they get treated by criminals, or at least treated suspiciously by the insurance company because we as consumers earned that, and then you get the tit for tat recriminations, and that results in low loyalty to the brand, in low retention, in high costs in settling claims. It's very hard to pay a claim in 3 seconds if you're deeply distrustful of your customers. So for us, the give back was really changing a 2-player game where it's a zero-sum game to a 3-player game by having the charity in the room, and it moderates the behaviors both of the insurance company and of the insured. So there's been quite a lot of work going into it, and I think it delivers on that. And the brand of Lemonade, the customer retention levels, the employee retention levels, etc., more than pay for the give back in other currencies as well. So no, we've never had the kind of pushback that you're talking about. We were founders as a B Corp, as a company that sees itself as a double bottom line. We have never flown the ESG flag, but certainly the idea that insurance should be a social good rather than a necessary evil was a founding principle of Lemonade.
Okay, so look, a key part of this interview is to get your take on the future of finance, but first we are going to take a very quick break, after which we're going to continue our conversation with Lemonade co-founder and CEO Daniel Schreiber. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, now, Daniel, let's now talk about the future of finance. So, Daniel, we touched briefly on the kind of drop in valuations that impacted fintech, something that's especially visible, I guess, when it comes to publicly traded ones, but also obviously high-profile private ones. Was it inevitable that there would be some kind of reckoning? And if so, should founders and bankers feel bad about investors who maybe came in late and are now sitting on rather large losses?
I think it was inevitable only because there was an exuberance that was irrational. Valuations had skyrocketed, and clearly there were macro forces at play, injections of cash and governments distributing cash because of COVID that drove up a lot of asset prices, and we're seeing inflation across real goods as well as virtual goods as well. So clearly there was something of a distortion, and I have to say I didn't feel particularly comfortable with the lofty valuations that Lemonade reached in such a short time. We've since then grown up, quadrupled our business and expanded into other countries and launched 3 or 4 other lines of business where by most measures a far more valuable company today than at IPO. And yet at IPO we skyrocketed to 160, 170, even touching $180 per share. And the expectations that are embedded in those kinds of valuations were always daunting to me as a CEO. So at that level, I'm glad to see some rationality come back into the industry. I think it's also good for companies like ours who did raise money. We've got full coffers. We, I believe, will be one of those companies that are able to get through the kind of the tougher times because we're entering the desert with a full water bottle, so to speak. So I think both in terms of just what's good for the industry and also what's good for Lemonade, the old Warren Buffett line about when the sea goes out, you see who's wearing a swimsuit, kind of applies to Insurtech as well. I think it will clean up the industry, and I think it will make us a better industry as a consequence.
And across the fintech or Insurtech space, do you get a sense that we're now in a similar situation to where we were post-dot-com crash, where we'll see innovative fintechs kind of rising from the ashes into big sustainable businesses, and smaller ones, as you say, perhaps being shown not to have been wearing their swimming cozies or who didn't raise money in time, falling by the wayside?
That's certainly my hope and expectation of Lemonade. Our aspiration has always been long-term. We want to build an iconic company that will endure for decades, or as insurance companies sometimes do, for centuries. So we have taken a long-term perspective from day one. The founders letter that we put into our IPO prospectus envisaged this, spoke about this, and lay expectations accordingly. So that is our hope and our aspiration, and indeed our expectation.
And given that there are many companies that have got full coffers and there are many that are struggling and perhaps can't raise money, do you get the sense that we're on the cusp of a mergers and acquisition boom, or at least like a large amount of consolidation should be in store now?
Some of it's already been ongoing. Lemonade acquired Metromile last year, and that was an example of that. I have to say we have reviewed dozens of companies and been approached about dozens of companies over the last couple of years, and I don't think we will be particularly acquisitive. We are a vertically integrated company, all our own software, our own brand, everything internally developed, and companies like ours struggle to acquire companies that are not of the same culture. We want to maintain a single culture, single brand, single tech system, and therefore inorganic growth, I think, will be limited for us. But companies with other architectures may well see more of that, yeah.
Of course, at a broader level, in the macroeconomic environment, we've seen interest rates rising very fast. We've seen inflation coming down, not perhaps quite as fast as many economies would have liked to have seen. How does this affect an Insurtech? I mean, does that just help when you're kind of, on the investment side of things, where you're putting people's cash perhaps, or is it pretty much recession-proof anyway, so it's the best part of fintech to be in? How does the macro environment affect Insurtechs?
The demand is pretty resistant to all of the gyrations of the macro. So we've been around, COVID and market collapses and everything else. And if you look at our top line growth, really it'd be very hard for you to detect any of the huge shocks to the system that the macro economy had during our existence. But it does affect us in other ways. The two dramatic ways that it affects us. One, and this is the most important one, is that inflation is not good for loss ratios. You sell a policy today based on a certain expected loss. I can't renew it for another year. That's the price that's set. But in the meantime, I'm paying you claims based on a rising cost to repair your car, to repair your home, or to treat your pet, or what have you. And in the US, that is compounded by the fact that even upon renewal, I may not be able to raise your rates because I need regulatory approval. And therefore, the cycles for price changing are very long indeed. And in the meantime, you find inflationary pressures will depress profitability. And that's been the fate of the insurance industry at large. And in America, it's been particularly pronounced. And we have not been spared from that. Now, this will pass, and high interest rates look like they're doing what they're meant to be doing. But in the meantime, that will extract some, the pound of flesh from the industry and from Lemonade as well. And the second part is just that the cost of capital have risen. So the high interest rates have driven investors away from growth stocks like ours. That has depleted, deflated stock, and for companies that have depleted resources has also meant that they will find it more difficult, or certainly more costly, to raise capital. And we have moderated our growth rate in order to make sure that the full tank that we have now will last the distance. I'm pretty confident it will, but that required a change in pace, even if not a change in direction.
Okay, and if I recall correctly, you once told me, and I think you touched on this just before, that you chose insurance because it was one of the least trusted parts of finance. Is there any evidence to suggest that you've not just obviously helped convince people that Lemonade is great and they should be signing up to Lemonade, but that insurance as a whole is something, particularly that millennials or Gen Zers should be, falling in love with across the board, or is it just more kind of, on a case-by-case basis?
That's a great question, and honestly, I don't have good data on which to answer that.
Okay, I'll move on to the next question then. You've been using artificial intelligence and chatbots for quite a while. I think that's obviously how you are able to. You've not got someone, quick claim in, done it 2 seconds, there you go. So you've been using AI and chatbots and the like. How much does all the excitement around generative AI, and perhaps not just the excitement, but the actual real changes that it's bringing, how does that change the game for Lemonade and other fintechs, and what will consumers actually see in terms of any difference?
Yeah, I think for us it's very much the fulfillment of the vision. We spoke back in 2015 when we founded the company as being founded upon AI, and at the time it didn't have the same flair that it does today. But we envisaged that if we build us architecturally, technologically, if the substrate of the company is digital and AI enabled, that will enable us to rise and to keep upping the level of our game and to increase our differentiation and our competitive advantage as these technologies mature. And I think we've been seeing that. So our homegrown AIs do an incredible job, particularly on the machine behind the scenes, not even the chatbots, but behind the scenes with the machine learning capabilities of predicting risk, which is really the whole kit and caboodle when it comes to insurance, being able to differentiate with an ever greater level of granularity between different kinds of risks and to be able to price and underwrite them at a level of precision that incumbents struggle to do because of their data infrastructures. Generative AI, I think, it takes some other capabilities that we've had, like the chatbots, to absolutely the next level. So if I spoke earlier about how close to 50% of our claims are handled today using chatbots, I imagine we'll be able to up that number dramatically, and I think that will be true across the board. Indeed, in insurance, so much of what's going on is about document ingestion or creation. You sign on as a pet owner, pet parent, you want to buy insurance, you give us a veterinary report. Somebody has to read that, ingest that, figure out what the pre-existing conditions are, and the same is true when you buy home insurance and you get a surveyor's report. So a lot of things that today have required humans in order to scan through those documents and find the proverbial needle in the haystack, we should be able to do at a lower cost, at a higher speed, to the delight of the customer. Okay,
and one thing that we've been seeing in certain areas of finance is big tech kind of coming in. So we've seen Apple getting into things like buy now, pay later, or we've seen WhatsApp launching WhatsApp Pay in certain emerging markets. Insurance is obviously slightly different because it's even more heavily regulated than those other areas of finance. But is there any day that you maybe see in the future where big tech might think, oh, you know what, insurance, that might be a good, nice revenue stream for us to tap into? Is that a possibility?
Never say never. There have been persistent rumors about Amazon getting into the space for years now. But I think if they get into it, it will likely be in a slightly different vein. So Google, for example, would be a formidable insurance company. The data sets that they have are just so stunning. Their familiarity with consumers is so deep and pervasive that I'm sure they would make a formidable insurer. But they make stunning amounts of insurance of money today from insurance just by selling AdWords. So Progressive and Geico and Lemonade and others pay Google a fair amount of money. So I think actually they would not become more profitable by competing with their customers. They are already extracting huge dividends from the insurance space. And I think that's true for most of the tech companies, that they are, while not being primary insurance companies and not having to handle the brand and other challenges that comes with insurance, the risk, the regulation, they are nevertheless already extracting huge amounts of profit from insurance. So I'm not anticipating a huge change because of that.
Okay, and Lemonade, I think you're kind of technically headquartered in New York, but you're also, big operations in Israel, and also I think you said in Amsterdam for Europe. In Israel in particular, there's a lot of controversy, as you can imagine, surrounding this judicial overhaul from the government. Many entrepreneurs, some of them have said they're going to take their money out of Israel. There's been concerns about the impact on investment. What do you see in terms of the impact on the startup scene in Israel?
Lemonade doesn't operate in Israel, in as much as that's not where any of our consumers are. We aren't licensed to sell insurance in Israel. We operate in European markets and the US market. So at first approximation, this does not affect our business. It does affect many of our employees. So we have about 300 employees in Tel Aviv, and they are quite concerned and agitated, and the company is firmly on the side and has spoken out. Both myself and my co-founder have spoken out and written about our support for the counter demonstrations, and we've participated in them. And we give employees time off to join the demonstrations, and many of them avail themselves of that. So we're not neutral on this, albeit I think our company as a company is pretty resilient and little affected by this rather dramatic thing that's happening in Israel.
Okay, so time now for our round of rapid fire questions. Are you ready?
I'm ready.
Okay, I'm going to put 90 seconds on the clock. We'll try and get through as many of them as possible in that time. Just one word answers is all I'm after, and away we go. So, what fintech segment, aside from yours, has the biggest potential over the next 5 years?
Lending.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Inflation.
Do you think that we're at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
We don't.
Have regulators in the EU and US kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
Not even close.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of the future we don't want to miss out on?
B.
Have you ever invested in crypto yourself?
Absolutely.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how likely is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
5.
That central bank digital currencies, CBDCs, will become a mainstream reality in the US and EU?
3.
That you'll be able to open a crypto account at a top-tier bank?
7.
That SWIFT will continue to be the main tool used for transferring money around the world?
7.
That a new card or non-card based rival will emerge to challenge Visa, MasterCard, Amex, etc.?
6.
And that we'll see a top-tier bank or insurer bought by a fintech?
Wow. 6.
Amazing. And you have actually gotten through all the questions in the time allowed, so that makes you a winner in my eyes. So, but we are out of time both for that round and for our conversation as a whole. So I really want to thank you again, Lemonade co-founder and CEO Daniel Schreiber, for joining me today.
Great to be with you.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter @Paris Fin Forum. Hope to see you next time. Bye-bye.